All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is episode number 170, and this is our Q3 2024 earnings recap. We will be diving into all the good numbers. I've got Matt Money with me, Arnie, and Amir. Amir's got a bunch of charts to share with us as he has plugged in all the beautiful numbers from Palantir into his Excel spreadsheets, and we got a lot of stuff to dive into. On top of it being Palantir earnings recap, this stock was $40 on Monday. The stock currently, if I'm not incorrect, closed at $58.86. So it's been a bit of a week for Palantir as it has surpassed $130 billion in market cap. A lot to get into. I'm going to start off the show with kind of raw reactions to earnings, 30 seconds to 2 minutes, kind of how it was, and then your raw reactions to the price action of this week. Arnie, let's start with you.
Look, I think what we are seeing now is exactly what I hoped to see one day back then when I started investing in the company. Like when you realize the power of the software, you wonder, but why is the growth that slow? Why is the company burning so much money? And that was the state back then when we started. But now we are kind of the opposite spectrum. Like, okay, now I really struggle to find something that I don't like. Let's exclude the valuation for a bit. Like operationally speaking, what doesn't convince me? I struggle to find an answer.
Okay. Amir, your raw thoughts to earnings and the price action this week.
I'm unmuted. Hello, everyone. Sorry for my voice. I have a bit of a cold. This quarter was very pivotal for me. I mean, it was very important because the comparison period for Q2 was very weak. So we didn't really know the true momentum of the business. I mean, Q3 has now cemented that Q2 was not a fluke, when we started to get this huge, rapid increase in growth. And now Q3 had a very normalized comparison period. And now we've been growing at above 30% for 2 quarters in a row. If you look at just the organic growth, excluding SPACs, we got AIP monetization hints that they're actually starting to charge people for AIP properly now. Government is ramping up, proving my thesis and a lot of other people's thesis correct on that one. Margin expansion, sales efficiency. But the biggest one for me, just to share a quick little chart that I'm really excited about is this one. I'm just gonna for a short moment here. This one, average revenue per client, has been increasing for 2 quarters in a row, and I think that dynamic is very, very important because that's super difficult to do when you have a larger customer base. And all these periods before, Palantir offering was sold like in a much more massive package. Like you had to buy Foundry in 2021, you had to buy like the whole complete package, even though you wanted just to solve a small use case. So of course it's natural that it went down, but that we're actually reaccelerating that's very exciting to me. As for the stock price, what are we at? I don't watch.
Okay, you got to stop this shit about
No,
you don't watch. I know you think people believe it. I know you think...
tell you something funny, okay?
No. Let me say that. I know Amir, this is how I personally feel, and the rest of the community probably feels this as well, has the best valuation videos in the community. And the price doesn't matter to him because he's all about the valuation, the growth. He can put in the numbers in his beautiful spreadsheets. But you obviously look at the price every day. This is a big part of your net worth. You look at it.
I don't. No, okay.
I kind of believe you that you don't.
I started writing my Seeking Alpha article on Palantir. I was so excited next. I'm like, Palantir is undervalued. I'm going to show everyone. And then it went up 30% by the time I finished writing. I'm like, it's not undervalued anymore. What am I going to do here? I was like all excited on X. So when I started writing it was undervalued. It had like this huge clickbait title, everything. And I just had to change everything because it went up like 35%. I don't know. So, yeah.
So yeah, your reaction to $58. Sorry.
Great.
Okay, we'll get more into valuation a little bit later as well. Matt, your thoughts on earnings and your reaction to price action this week?
So earnings, I think if you were to roll back about a week before, so last week, 7 days ago, we all kind of hit the nail on the head with respect to our revenue growth expectations. So we hit it right on the head at about 30%, and they came in at 726. I think we were all predicting 725, 728, something like that. So in that respect, awesome. What I will say, and I want the community to hear me say this, is I was wrong. I thought that the stock would go down if it wasn't 35% year over year revenue growth. And we've obviously gone in the exact opposite direction what I expected. And so don't necessarily think it's a bad thing or a good thing. I just would hope that people remain vigilant and hope that they're following the company for its underlying future performance and what they're doing, right? But I would just caution people that while they might be up right now, who knows what's going to happen? The thing that I fear with respect to this, I think a lot of people were excited about the words that were coming out of everyone's mouth during the call. And we can maybe touch on this a little bit later. I don't want to get into like a whole spiel, but basically a lot of hype is being put into the stock. And so if there's any underperformance in future earnings or anything of the like, that will lead to drastic cuts in the stock price in the future. So my hope is that this persists. People recognize that this is a company that's one of one and continues to show that. That's just been something that we've been preaching on Palantir Weekly for years at this point, literally. And my hope is that people start to finally recognize that. But I just want to admit to everyone that I was wrong. I really thought the stock would go down. So congrats to everybody that's made some money, and I hope we continue to make money in the future.
Yeah, and I don't think it was just you were wrong. Our last Palantir Weekly objectively was one of the most bearish Palantir Weeklies we had, and bearish not in that we bearish Palantir. It's just that look, at $40, we all thought the valuation was up there, and even with 30% growth, I remember all of us said 30% growth might not impress the street. It's going to impress us as investors, but the street is pricing it for like kind of 45, 37% growth. I think is the exact number. They came in at 30%. Street said we love it. Here's another 50 billion. And I don't think any of us expected that. Maybe we didn't expect it to necessarily tank on 30% growth, but we definitely didn't expect it to go to almost 60. But here we are. And now it's time to analyze it.
Investing in Palantir seems a very humbling experience. So what have you learned from these earnings?
It's a good question. I'll start off with it. Look, I think the biggest thing, and we'll get into the very specific numbers, but just shortly, I think their government growth reaccelerating to 40%. That last quarter was 24%. I think that was the big thing, at least for me, and I'm pretty sure for a lot of other people. And I know Amir feels that way as well, because we know government is going to compound. We know the government's spending more on AI, the DoD, maybe there's a Navy contract coming up that we saw this week, but it wasn't in the growth. And this quarter, it was in the growth. And so then now the question is, are they going to keep compounding at 40% every year with government revenue, which is sticky parts of their business? I don't know. But I think that part to me was the most humbling to see that is growing in the right direction.
In terms of being humbled, I think it's just realizing that I don't really understand Palantir to the point that I thought. One of the main things is that, as probably most of you guys listening in, I thought that Palantir's performance would be closely correlated to the amount of clients that they can get, because it's all about acquiring all these new clients. I thought that, well, they ran like thousands of boot camps this past 2 quarters, so it should have resulted in a lot more clients. No. But did it impact their results negatively? I mean, not necessarily. So, I mean, there's just so many dynamics at play that I don't really understand yet. So that's humbling in a sense. I also, each quarter that passes, I have been revising my profitability up for Palantir. Like, I really underestimated what kind of margins Palantir will be able to get in the future. And they just keep proving how efficient they are and how low operating expenses they have. So, I mean, it's a very humbling experience to just track this company quarter over quarter for all these years, because you always learn something about the business that you thought like, okay, I have this company on lock now. And then they're just like, nope, start again, try again.
Okay. So let's listen to Karp for 2 minutes, open up the earnings, just remind everyone kind of what he was feeling and what he said about the results. Then I want to get into the numbers, and then we will get into the progress of the business and where we think it is headed.
Given how strong our results are, I almost feel like we should just go home. But you know, we've been saying since we went public in a DPO that we would build infrastructure to make America and its allies the dominant force in the world. We claimed uh, to much skepticism that this would be done in a software product, that defense and commercial industry would be driven by software, hardware, hybrid technologies, that there were very few companies in the world that could actually do that, that these companies are basically only built in America, that the companies that have tried to do this that aren't Palantir are built by ex-Palantirians, that the financials of Palantir would flow from our products and our culture and our way of implementing, that we would bring violence and death to our enemies while targeting and general issues of safety better for our allies and for Americans, that we would stand by our values in thick and thin, including that the West and America are superior ways of organizing and that this is a great country and historically anomalous in its greatness, and that we would build a company with the best people from all over the world, but primarily from America, to power America and its allies.
So that was Karp's opening statement. These were the results. Top line revenue growth of 30% year over year, 7% quarter over quarter. U.S. revenue growth of 44% year over year. U.S. commercial 54%. Government revenue again 40%, which was big. Customer count growth 39%. It did decline quarter over quarter at 6%. Closed 104 deals over $1 million. GAAP net income of $144 million. This is their 7th quarter of being GAAP profitable. GAAP income from operations $113 million and 38% adjusted operating income margin, which was incredible. Rule of 40 score of 68%, also incredible. And now Palantir has $4.6 billion in cash, no debt, and they bought back 1.8 million shares last quarter. They're guiding for about 26% growth in Q4. Probably will beat that guidance and try to get to 30% or hopefully above 30%, as now, you know, the street's expecting them to get to that 30% level. Another thing they did is also raise their guidance for free cash flow in excess of $1 billion. Okay, so I guess we'll start with the first question here, which is, I guess we'll do this question and then whatever charts we have and we can look into it. Well, this guy's joining us now, so we might as well introduce him onto the show because that'll kind of really start the discussion. Steve, thank you for being on today.
I feel like I haven't seen you today.
Yeah, I know. It's not like we talked for 3 freaking hours, 5 hours.
You know what I brought with me?
Oh, don't do it. Don't do it.
A glass jug of milk.
All right. For those on Palantir Weekly,
milk from the farm.
For those that don't know Steve, he drinks cold milk for fun.
Steve, why didn't you call me for 3 hours today?
Delicious.
Because he was drinking milk.
I was sitting by my phone all goddamn day looking at it. It was like, he'll call any minute now.
Is there
Oh,
something?
look at that. Just
against
enough for a perfect glass. Look at
Dude,
that.
this is just weird, dude. There's not even
You
any
missed a
coffee
drop.
in it. It's just, yeah, you missed it.
Is there something against the cold milk in
Arnie,
the US?
do you drink cold milk ever? Do you ever drink milk?
Yes, a lot.
It's very common in Sweden as well.
Everybody
you drink
drinks
milk?
Yeah,
Yes.
but yeah, I can tell you it's not the kind of milk you have in the US, because when I was in the US, it's something completely different over there. I don't know what kind of
So,
plastics and shit you have
US
in your...
milk
No, no,
is
no, no,
evil.
no, no, no. This is, I go straight to the farm for this.
You get it from the cow themselves?
I get it from, so the farm comes to my area. I go to the market and I get it straight off the back of the truck from the farm. It's from
All right.
Ronnie Brook Farm up in Westchester. And it is delicious. This is not store bought.
All right. So given you now have your calcium and your milk and you have your protein, I guess, to
Yes.
have the energy to discuss things. Let's start off here, and we'll have a lot of discussion going into this. But Steve wrote an article today. I'm putting in the chat. And the title of the article, although you are a big member of the Palantir community, you've been bullish for a very long time, is the top is likely in for now after appreciating 223% year-to-date rating downgrade. So let's start the conversation with you, Steve. We just went through the exact numbers in earnings. Was there anything in earnings that could get you to justify a $130 billion market cap on Palantir?
No.
Why?
Because the valuation's ridiculous.
Okay, so why? What is your logic around this?
So let me preface it by, I still think that this is going to be the second most important software company of our generation behind Microsoft. I still think long term, 5 to 10 years, this could hit 150 a share, maybe higher. Right now, I think it has hit a short term top. I think a retracement is inevitable at this point. I guess I was wrong today that it just kept going up, but pullbacks are healthy and the numbers don't justify the valuation. This company's growth is amazing. Everything from the business aspect is firing on all cylinders. Their net dollar retention of 118%, incredible. The amount of deals they close every quarter that's over $1 million, incredible. Creates a huge compounding effect going forward. Not bearish on the company, not selling my position, certainly not adding more here, but customer growth, deal growth, net dollar retention, their margins, there is everything to be bullish about this. But when you talk about a realistic or even a premium on a realistic valuation, I think we are well past that point here. And I don't think that that is crazy to say at this point. I mean, look, prior to this quarter, everybody thought 45 next year was a crazy number to hit. We surpassed it previously. We are well past the S&P trade, and this thing just keeps going up. And the numbers are very hard to justify. I mean, if you could, because I'm on my laptop because I've been having problems with my PC. If you could bring up this and then the next one. As of yesterday, it was trading at 125 times free cash flow. At some point, numbers have to matter. Okay. That means that as of yesterday, if somebody was to acquire it at just market cap, it would take 125 years for them to regain that investment off of the free cash flow generated. Even if you want to talk about growth. And while they're still growing, yeah, they're still growing, but okay, if you cut that down in half, you're still at 65 times free cash flow, 63 times free cash flow. Those are crazy numbers. Go to the next one, please, the price to earnings. Because this is what's even crazier, because I know what people are going to say. So I hear it all the time with other companies. You're paying for growth. You are paying for growth. That's what I hear. Well, based on the forward estimates from the analyst community, Palantir is expected to grow their EPS, which is basically what you need to go by, some level of profitability. So if you don't want to go by free cash flow, go by EPS. They're expected to grow their EPS by 47% over the next 2 years. And they were trading at 99 times 2026 earnings. So if you're paying for growth, Amazon's expected to grow their EPS over the next 2 years by over 48%, more than 1 percentage point higher. And Amazon is trading at less than 30 times 2026 earnings. So are we really saying that Palantir should be trading anywhere near 100 times 2026 earnings? I mean, maybe Palantir is the one company besides Tesla that never has to defy any rule, that can defy every rule. Maybe it is. Maybe it can keep going higher. But we've seen it with Tesla in the past that valuation gets absolutely ridiculous and it comes back to earth. So I don't think everybody should be in the camp of this is going to 60, 70, 80 in the next month. I just don't.
So I want to chime in here, Steve. So as you know, I'm always very respectful of you. I think you're very intelligent. You know what you're talking about. And I agree with you wholly on what we're talking about here. I think where people might push back, and I'm not saying I'm in this camp, but I think people can make this argument, is this is based off of, let's just say, the current sort of estimates of where they think the company is currently heading. I think where people might be getting into the euphoric mode and thinking, oh my God, I need to own the stock right now, is they're seeing this growth from just a couple quarters ago, 16% year over year, to now re-accelerating back to 30%. And they're saying we're still seeing unprecedented growth. They're still giving away the software for extremely cheap. NDR is increasing. At what point do you see this plateauing and actually, hitting a point where you stay at, say, 30%? I don't think people are in that camp. I think people are still thinking we could get to 40, maybe even 50% year over year growth in the next couple of quarters. And that's what they're potentially buying into. So if you think about that, I'm curious. I don't know if you have the numbers offhand. Maybe Amir, he's really good with this stuff. If you were to say get to that 40-50% year-over-year revenue growth in the next 1 to 2 years, what does it actually look like? And what are you actually still paying 99x price to earnings in 2026? Or does it actually show up more like 40 or 50? And then you're actually saying, well, on a 2027 basis, you're actually not that crazy off if you're able to accelerate growth to where people think. And I think at the moment, because Palantir hasn't given them a reason to think that we're decelerating still or we're plateauing, I think that's the story that people are buying into. To me, I think that that's unfortunate. I hope people don't get burned. I hope we don't have a tracement where people are buying at $45, $50, $60 and they get turned off from the stock, because like you, I agree wholly. This is probably, and I have been saying this for literally years on the Palantir Weekly Spotlight every Friday, a once in a lifetime opportunity. And I think this is a phenomenal company.
Let me just jump in with one extra thing that I don't think anybody's really discussing. When you really go through the numbers, we are still in a high interest rate environment. The Fed just cut again yesterday, but rates are still at 4.5, 4.75. So Palantir has benefited drastically because they have about 3.5 to 4 billion sitting in marketable securities. So the bottom line is that in the first 9 months of this year, these are the facts. This is not distorted. Okay. Palantir has generated 142.07 million in interest income during the first 9 months. This is 36.34% of their bottom line profitability. More than 1/3 of their profitability, which translates to their EPS, which allows them to beat on the bottom line because that's the number that analysts look at, is coming from interest income. That's not good, especially going into an environment where the Fed is going, based off the Fed dot plot, to 3.5 by the end of 2025 and under 3 in 2026. You're going to lose half of that interest income being generated. So they may be setting up for in a couple of quarters. If they can't translate to the same growth levels, they may miss earnings estimates. And if they do, forget about it. This is getting shot by 30-40%.
Let me just, I know you want to chime in here, Amit. I just want to simplify what Steve said. Basically, they're making hundreds of millions of dollars a year, $200 million a year based off of net interest income. That's going to get cut in half. You need to offset that by the revenue growth and the ops income to be able to make whole and almost offset it completely. We're not talking about things both going in the same direction.
Are you wearing a sub?
Don't judge me.
I'm not. I'm just saying it's at night.
Well, just to answer your question earlier, so
Matt wears subs.
Maybe I'm going to go for a swim. I don't know. You can't.
I don't know. The Matt wears subs at night. That should be a song.
Okay, so hold on. So Amir, I know you have a lot to say on this, so I want to give you some time to do this. So Arnie, get your quick thoughts out for 2 minutes, and then we'll give Amir the floor, and he can.
No, I don't have a lot to
I
say.
would argue on 2 points. Like the first one about the interest rates. It is true that a big part of the net earnings comes from just receiving cash in interest. That if the rates decreases, then that would hurt that number. But we should ask ourselves as investors, is that the number that we really care of, or is it just an output of like the financial side? Because as an investor and as a past analyst, like I know how fund managers look at things, and what we really care is the operating side. Now, the financial side, meaning the interest they receive, yes, it is important, but if you really want to evaluate the story, you evaluate the growth of the operating numbers. So before the
Which operating numbers do you want to talk about? You tell me what operating.
That is the primary number since it was at bottom. And
what operating numbers? What level of profitability do you want to talk about? You tell me.
I think Arnie's point is that it like you're correct. 33% of their net income is interest income, but if the business accelerates and inflation comes down, rates come down, they're organic.
Out of it? Yeah, but I mean, which operating numbers you want to look at? You want to talk about gross?
In general, if adjusted operating margins go up, they will make more business from income from operations.
Amit, they can't increase operating margins much further.
That's the wrong answer. No.
It is
Look
not
at
the
the
right
Dolby.
answer.
What? No.
Oh, we got
What?
some disagreement. All right, here we
What are you
go.
saying?
They're
What
already
does it really
operating
care?
at a gross
I
profit
think-
of more than 80%.
No, not gross profit. Adjusted operating growth. 38%.
Operating margins.
I
I
get
said
that.
gross profit.
Okay, let's share
get
this
that.
one.
They
And
are
you
already
tell me
operating.
why they would stop.
Okay, now Steve,
their
let
margin
Amir
expansion.
say a bunch of stuff, so don't interrupt,
sure.
and then I'll give you the floor to respond.
No, let's have a discussion here. So, can you see this well?
Yeah, we're good. You're good.
So these are the operating expenses associated with Palantir, and as you can see, there's a clear trend, and it's very clear why Palantir's operating expenses are more or less static or range bound, and it's not associated with increase of revenue. So typically, most companies would you would see increased spending in order to acquire an increased rate of revenue. That's not the case for Palantir. Their general and admin, more or less static. Their R&D, which surprised me actually, has been more or less static at 100 million for like 4 years. And during that time, we got a lot of new platforms. We got Warp Speed, AIP. I don't need to tell you. They've been doing a lot on the R&D segment. And it's more or less static. And the sales, you might have thought that, well, they're actually starting to accelerate revenue growth, so sales should be going up. Nope, sales is also decreasing. So you tell me, why would margin expansion stop here, Steve? Make the argument. Why can't Palantir increase their operating margins? Because I think there's like no end in sight in regards to how they will increase their operating margins. I think this will continue for a long time.
So
and again, excuse my voice, I am sick. So
then, no problem. So can you bring that back up, please?
The chart?
Yeah, and you gotta zoom in a little bit, Amir.
Yeah, sure.
Get a
I
little
will
bit better.
try.
I couldn't read the words on it.
I think what
Yeah.
Amir's trying to say is cost basis, or sorry, SG&A, and a lot of these things have kind of remained flat, and they've actually decreased employee count year over year.
So what this chart shows is the operating expenses as a percentage of revenues. So instead of just tracking the absolute amount, which is more or less static, if we put it in relation to the revenue, which actually translates directly to the operating margin, we can see that all their costs as a percentage of revenue are going down, and in return, you get this margin expansion. And it's been going on for a long while now, and I don't really see an end in sight for this, because they are operating, they are doing a lot of stuff, they are scaling, and there are no real costs associated with that, which is one of the black magic things about Palantir. They're doing so much, but not at an increased cost.
Sure. So yes, they are static at the moment, and revenue is going up, and they just recently became profitable. But as they continue to scale, they are most likely going to need to bring more things on. Can they stay at these levels or even decline? Sure, but it's likely that they won't. Maybe they can.
Why? Because
At
that's
some
the
point,
discussion here.
So okay, so R&D has been going up. R&D in the trailing 12 is $445 million. Last year was 404. The year before that, it was 359. Selling general admin is at 1.34 billion. Last year was 1.27. Year before that, 1.29. So it is gradually going up as they expand. For cost of revenue this year, trailing 12, 500 million. Last year, 431. The year before that, 408. The cost of revenue, their R&D, and the selling general and admin have been going up year over year for the past several years. Now, they're outpacing it with revenue. In order for them to keep these margins the same or have them continue to go down, they have to continue growing revenue at this rate. You have to believe that growing revenue at this rate is possible, or it's going to accelerate to keep that chart the way it's going. I can't predict that that's going to happen, but they're already operating at a gross pretty much where they're going to operate. They can't.
But why would you invest in Palantir if you don't think they're going to grow revenue, right?
But the growth will always stay the same for a software business.
I said that they have to continue
one at a time.
revenue at this pace to keep that chart intact.
Yeah, 30%, right?
Which Do you
Like,
think
why
they're
would you
gonna
invest in
grow-
Palantir if you don't think they're going to grow 30%?
Do you think they're going to grow revenue at 30% year over year, year over year?
I
year over
have
year?
to believe that if I'm investing in this company. What do you mean? Do I think? Like,
At
if I
this
don't even-
price, at this price.
At this level?
Well, I'm not
do you
buying
think
at this
they're
price, but the point is, if I'm going to hold my shares till 2030, I have to believe there's a growth story here.
I'm not
Like,
saying there isn't a
everyone
growth
has
story,
to.
but at some point, this isn't going to compound 30% every year.
Steve, I
Think
don't
about
think
how
you can
much-
hold
think about how much-
Palantir if you don't think there's going to be at least 30% growth, which is why the past 2 years sucked, because there was like 13% growth. I mean, this can't be the
So-
most important software company in the world if we're not growing at 30%, at least for another 3 or 4 years, right? At minimum.
We're going to see if this is an anomaly a lot, but we are pulling so much of that growth forward.
I agree with that.
Where-
I agree with that. I agree with that.
So that's really the thing. For this to sustain and grow into this valuation, they can't miss. This is price past perfection.
I agree with that as well. I agree with that as well.
One bad quarter, one miss on EPS, this is going down.
That's exactly what I
that's
said
what's
before you
scary.
joined, Steve. Yeah.
Like, you can't think that everything's going to be perfect every quarter because we all love this company. Like, you got to be realistic.
That is true, but this is true for every company. I want to understand why specifically on Palantir there could be something that goes
True for every
against
company.
the-
Meta never messed up, and they freaking went to 90. I mean, people were mad at Zuckerberg spending profits on CapEx to grow the metaverse, whether they agreed with it or not. He was doing the right thing for the shareholders, and that thing still tanked.
Yeah, he didn't mess up, but he changed the trajectory of the company, which is what freaked everybody out, right? I don't disagree. I think he did the right thing for the company, changed the name to Meta, etc. And I think he'll continue to do extremely well. But
Meta's going to 7,750.
Okay, so let me, Amir, go ahead. Yeah, I was going to ask another question.
Matt asked this earlier. I just didn't get a chance to say it. So you asked, in terms of valuing the business, what would Palantir need to do in order to justify that 55,
Yeah,
wherever
58,
we close?
yeah.
They need to grow profitability a lot quicker than they
Okay,
are. Their
okay, Steve,
profitability
relax.
level
Okay,
is-
He's gonna, Amir's gonna bring up a model.
Like yeah, thank you.
Well,
So
DCF, what type
it
of
would
model?
imply, if we just let's assume 30% free cash flow margin, just to keep it simple. I think it's
Sure.
kind of low for Palantir, but
They
that
could
would
get to
mean
40.
oh my god, can you shut the fuck up, dude?
All right.
I'm agreeing with you. I said they could get to
I
40.
can't. I'm
Chill.
too sick for this.
All right. All right. You're good. You're good. You're good. Go ahead. Bring up the model. All
Heard it here
well,
first.
Well, sometimes this, Steve, the milk and your interruption.
I agreed with them. I said they could get to 40% free cash flow margin.
I think something's personally wrong right now with it. He must.
He
be
said
sick.
30%. I actually said 40. I don't know what he's mad at.
No, I think he's mad that you interrupted him. It's not a big deal that you interrupted him at all. That's not a big issue. I just think he got a little.
I think he's sick and he's
Having a bad
feeling
day.
like that.
I would imagine
Yeah.
he's having a bad day.
It's all right. We all have bad days.
It all
Steve,
happens.
so
We're having a bad day.
let's turn this from Palantir Weekly to Pokemon Weekly. What's going on?
we're not.
I'm just kidding.
So, let's get into that conversation. So, regardless, guys, I wouldn't blame Amir too much about that. He's probably just got a little annoyed at that. I wouldn't also blame Steve at all. That was not anything to justify rage quitting the stream, but he's probably definitely a little upset in his personal life. We've all had these moments. I've had these moments as well. And I've had a lot of these moments with Steve, but I've never left because Steve keeps me. Steve keeps me on the stream. The amount of times on the market close, I wanted to just throw this cowbell at you, but I was like, you know what? I love him too much.
I give you
I
pure
cry in
winners,
private.
man. I give you pure winners.
No, you do. Okay, so let's Arnie, let's have you with this conversation. What would justify, just even top line, even if you don't have specific numbers, $58 right now? What are you thinking theoretically that needs to be justified?
Well, obviously, the story now is Palantir is growing a lot, is accelerating, and the story and the price implies essentially that story to keep continuing until we have at the point that proves otherwise. If you think of it, like Tesla essentially had this feedback loop, that momentum that kept building and kept building until something happened that, this company is not growing that much. The margins are not expanding that much. When interest rates increased, then like the compounding machine almost broke. And that created mistrust in the story, and that made the stock crash. So that is a similar line with Palantir. Until the story underlining the business is still impacted, is not impacted, meaning that the growth is there, the use cases are there, the profitability keeps expanding because they even prove that internally they can expand their margins while delivering more growth with AI. I think there is no better proof than that the company actually works. We would see like an improving story. Now, any evidence that permanently shocks, like destroys this narrative, is detrimental for the stock. But on the other side, if everything keeps compounding in the right direction, can you share the screen, please?
Yes.
Like we would see exactly what I actually shared like 2 years ago. But that's the essence of how a successful SaaS business works. Well, you have the operating expenses that are initially very, very high, but your business size is relatively small. So you end up having a negative free cash flow. But if you have a good engine behind the surface, when you scale, you're able to scale much faster than your cost. And this is true a lot for Palantir. We have been seeing that in the numbers. A couple of years ago, Palantir was burning cash. Now it is literally printing cash, while you have all these other software companies like a Snowflake that pretend to be very scalable, but in reality, they're just adding a lot of employees over a lot of employees. And we don't really see this. Like we see this, but under like a very different shape. While with Palantir, this becomes very, very clear. The more it scales, the more the gross profit can grow much faster than the operating expenses, because that is the nature of tech. We have Amazon, sorry, not Amazon, exactly the wrong example. We have Apple.
Maybe it is Amazon. Who knows? Maybe.
We have Microsoft that literally defy the gravity. But why? Because tech, by its essence, is do more with less. And the beautiful thing about these tech companies is when they reach a certain scale, the marginal effect of this, like the marginal cost of distributing something, literally goes to zero. So you can capture a lot of value while deploying very little resources. And we have been seeing this with Palantir as it today, right now. But I don't think we should exclude at all that Palantir's operating margin, so not talking the net profit margin, but at an operating level, can reach 50 or even 60 thanks to this dynamic.
So Steve, this is the question to you then. Arnie's describing this growth lever of operating margins going up along with top line revenue growth, which is kind of why the rule of 40 was phenomenal at 68%. You and I talked after earnings and you were like, dude, I don't really care about this rule of 40 number. So what is it about that makes you scared?
I don't care about the rule of 40 number, because what you need to happen is for them to continue to beat on the top and bottom line every quarter, because that's what the headline is, unfortunately, not how great the business model is. And I am worried that as interest rates come down, Palantir's growth rate may not hold up, and we may miss on the bottom line. And if we do, it could cause very serious ramifications for the stock price.
So here's the question.
That is a real serious thing.
Go ahead, Arnie.
I also have a question. You are essentially saying that if interest rates go down, that would be a negative for the company. Like maybe it is totally true that if interest rates go down, the net income from the cash on interest decreases. That is absolutely true. But that completely forgets the business dynamic, which is if interest rates decrease, the net positive value, like the net present value of all IT projects, becomes increasingly higher, which is exactly why during COVID we had the boom of tech. Because
basically, Arnie's saying rates come down, the market puts a premium to good companies that have growth.
Exactly that. Like now, the software business, like the software world, is still relatively stuck because all the companies were essentially spending a lot of money in IT projects because money was cheap. But what Palantir is doing is accelerating into this tough environment, which my bet is, okay, let's decrease the interest rates. deploying Palantir becomes marginally cheaper, the business would triple in no time just because of that. So rather than being a headwind, I think that would be like the most phenomenal business tailwind Palantir could get if interest rates decrease.
Palantir's product isn't going to become cheaper. It's just going to become cheaper for companies to borrow to expand their business. So that's two separate things.
Well, the net present value,
cheaper,
increases a lot.
Product does not become cheaper.
No, but businesses can afford Palantir if the cost of capital is cheaper,
If
which
the
means
cost
more
of
growth,
capital-
baby. That's what I'm
if the
talking about.
cost
Like
of
that's how we get
capital
there.
is cheaper, business expansion is more likely to occur, but that does not mean the price of Palantir software is going to change. How many
Never said that.
customers does Palantir have?
No, but the price doesn't have to change. But if they
How
sell
many
more of it,
customers does Palantir have?
629. But if they sell more of the
Is
software,
that a lot of customers?
no, obviously not. No.
Okay, so for Palantir to hit these meteoric growth rates that we needed to hit, they have to get into small, medium-sized businesses. That's a fact. You're running out of companies. You can't assume, and I am a Palantir Super Bowl. Okay, I've been in the stock since the direct listing. I'm not bearish, but you're running out of large-scale companies that can adapt this. Not every company is going to use Palantir. They need to start getting small and medium-sized businesses also.
Well, Karp doesn't agree with that, at least not for now.
Okay.
Well, hold on. Karp did say, Matt, I want to get your thoughts on this as well. Karp said on the call, we don't want 10,000 customers. We want 1,000 of the best customers. I feel like he's serious about that. And that matters when it comes to sucking more revenue out of them versus just getting more customers.
Yeah, what a great point there. I think he's more concerned about solving the very serious problems in this world that can drive the most high value of change for the least amount. So I think what he's focusing on, least amount of effort, I mean. I'm not saying he's trying to be lazy or anything like that, but I think what he's trying to make sure is he gets in front of the most serious problems to make the largest incremental change. And to me, that's why he went after some of the companies in the oil and gas industry. That's why he went after Airbus. That's why he went after the Army. If he wanted to just sell as many things to as many people, he would have gone to the consumer, right? And I just don't think that that's necessarily where they're after. And I think that's why they're not going after the consumer, because it almost, I don't want to say dilutes the value of the software, but to me, I think that he sees the ease of growing is a lot easier and has more impact in companies that are already doing some of the largest amounts of business. And I think also, to step on this, the companies that have the largest amount of employees that have been around for so long are also the ones that are more dinosauric and have had built on years upon years of processes and failed systems that need to be brought up to that new digital world into the 21st century, that I think they've just been resting on their laurels a lot of times. Oil and gas is one that's key. Banking is another one that's key in that area, in that arena. So I think he's recognizing that those companies have been able to be built over the case of decades, sometimes centuries, and they need a kickstart of efficiency within their organization to make sure that they're operating at the best scale. And also, it's very difficult to, without some of these global organizations, even very difficult to do business in the Middle East or Europe or America without having a unique system and an underlying language. And it's hard to do that when you're literally operating in multiple languages, you're operating in multiple locations, you're operating globally. And to be able to bring yourself up to the 21st century to maximize those efficiencies, you need something like Palantir to organize all your data in an appropriate manner.
Yeah, I mean, it comes down to this question. So I guess, Steve, what's your take on that? Like, do you think they need to get thousands of customers like Snowflake, or can they grow exponentially with 40 customers a quarter added?
It's a question that I don't think anybody can answer right now, and I think we got to wait and see, because nobody has a crystal ball.
Yeah.
I mean, look, there's no question that they are the real deal. There's no question that they're at the top of the food chain when it comes to this. Otherwise, the top tier companies wouldn't be presenting at AIPCon and showing all of the efficiencies and all of the great things that they've been able to achieve with Palantir software. So I don't think that anybody is discounting that, and they shouldn't discount that. And that's where the Bears got this wrong, that they didn't think that ontology was real. They didn't think that this was an AI play. and the Bears got obliterated. The problem right now is how many more quarters like this do they have to put up, and how much do they have to grow for this to continue to go up? All I'm saying is that for the time being, this is a valuation that even if it doesn't go down, they got to grow into this. Like, do we think the Palantir should be a $200 billion company? Because that's where we're on track to go to right now.
I mean, why don't we go to 2 trillion, bro? 200 billion is too low at this point.
Let's say
keep
250
going,
billion.
baby.
No. But seriously, let's say 250 billion. Do we think that Palantir, because at this rate, by the end of 2025, if there is not a pullback, there's a real chance we're going to be at 250 billion market cap. Does that make sense?
So
It's $100 share price, by the way.
So this is a really good question, and Arnie's got to leave in 10 minutes. So Arnie, I'll let you start first off this. The rest of us, we can probably stay on another 20 minutes on this. But
Because you know where I'm going with it.
No, but that's a good setup for this question.
Yeah.
None of us can numerically come to a justification for 130 billion unless we really mix with the numbers. So what can we all say is a reason to justify 130 billion if you had to be an analyst on Wall Street that was like talking to your clients to justify this price to them for somehow to make sense of it? I have a theory in my head. Arnie, I want to start with you, but what could justify even 200 billion if we actually get there? That doesn't have to do with the numbers.
As a potential analyst, it would be hard, given the current numbers, to justify. It is already hard, this number, to justify it because it requires very strong assumptions. And to justify something even bigger, it would require further extreme assumptions, which seem very extreme given the past that we know. But that brings me to the second point. Like, as Arnie, my bet is that analysts still don't understand the company. So what makes me confident that we can go farther is the fact that analysts still are stuck to estimates that are well below the true potential that is emerging. And for instance, when we were talking previously about the multiples, the valuation multiples, yes, it is true, like that is important to have a reference given the estimates, but it seems that the estimates analysts are giving are destroyed by the quarter. So
yeah.
So my bet as an investor is, okay, analysts are still wrong. Analysts still don't really understand what's going on. And until that doesn't happen, but smart investors are seeing that, and the business results are on our side, I still believe there is potential. Now, there is certainly a lot of interest, but I would argue that how many AI companies, pure software AI, there are now in the S&P 500? I know only one. And how much demand there is right now on that side, as from asset managers, I would argue a lot. So until there are no other alternatives, there is only one way asset managers need to expose themselves. And I don't remember if it was you, Emir, like credits to who said that, but we are approaching the end of the day, the end of the year. Asset managers can't show in their in their filings that they're not exposed to the big story that is emerging.
It's like if you didn't own Nvidia by July, you almost got fired as an asset manager.
You look stupid. Like, it's better to catch up like later, just to say, oh yeah, Nvidia, yes, of course we are exposed, even if they completely missed their hand. I mean, that's how the asset manager industry work, like window dressing at best.
Okay, so I have 3 answers to this, and then I want to go to Matt, and then Steve. I know you're calling a top here, but I want you to give me a justification for how you can make sense of this without the numbers. 3 quick things. Number 1, the ontology might be the most important thing outside of the GPU over the next 10 years. And I mean that kind of metaphorically in terms of that is the infrastructure to make sense of AI. And Karp's talked about that a lot. 2, government business is sticky. JD Vance is in the White House. He might start, giving Palantir, not literally giving contracts, but saying, hey, we need to use technology to become more efficient. Palantir might be a beneficiary of that. That just means insane government growth. That could really help over the next 5 years. And then finally, I think if the market's giving OpenAI $150 billion valuation and they're losing money and they're not profitable, and at the end of the day, they are building a commodity, even if it's the best commodity in terms of the GPT LLM, And Palantir is unlocking enterprise AI, which is trillions of dollars by pretty much every bank has determined this is going to be a multi-trillion-dollar market in the enterprise. Even though Palantir is small right now, the market might be saying, we want to be part of this story because Snowflake, Datadog, Databricks, Intuit, none of these companies are attacking this phenomena other than Palantir. Therefore, let's be part of it and let's pay a little bit more of a premium. And maybe that is the way to justify 130 billion. Matt, any thoughts on how do we justify this valuation without using numbers?
I think adjusted free cash flow is growing pretty quickly. I mean, we're at their forecast. The trailing 12 months is about 850 to 900 million in terms of free cash. If you start looking at what they're forecasting for fiscal year 24, they're talking about $1 billion, and they're growing pretty rapidly in terms of that. So, to me, if you continue to have these sorts of quarters where you get to, going back to what Steve was saying, I don't think it's necessarily out of the realm to expect in a couple of years where we get to $3 or $4 billion in adjusted free cash flow, knowing that we have 80% gross margins. The cash flow margin continues to increase, right? We were thinking 15 to 20% a couple quarters ago was where we would be kind of hitting. Now we're getting to the point where we're seeing consistent 30 to 35%. Are we going to grow to 40? Are we going to grow to 50? I mean, there's a lot of room between where we are today and free cash flow margin, that 80%. Obviously, there's need for normal costs, SG&A, marketing costs, etc. But I think as you continue to grow revenue and you get the efficiencies in the organization, you'll be able to kind of get closer to that 40, 50%. So to me, I think that's where people see that potential to get to 200 billion as kind of we were talking about, the $100 a share. I think that's where people start to see it, and that's not necessarily going to be impacted by buybacks or anything like that, because that's more of a share price, thing. But in terms of what we're going to do with that, I think that's what people are kind of curious about. What is going to be the next wave of things? There's $4 billion of cash on hand. They're going to be growing at $1 billion of free cash per annum. Yes, that might be slightly impacted as interest rates go down. That might slow down a little bit, but overall, we're not too far off from seeing this thing double in terms of free cash flow within the next couple of quarters. So to me, that's where I see the true value. What do you do with all that cash? I think everyone's still scratching their head and trying to figure it out. But I think that's personally where I see the potential where people might see. You don't need much. You just need $4 billion a year to justify a price to free cash flow of 50. Isn't too much of a deal. So we're only, in my opinion, a quarter of the way there. And in terms of being able to grow at, say, 30, 40% per annum, if you're able to do the same for the free cash flow, if you take the rule of 72, I mean, $200 billion actually doesn't seem like too crazy of a market cap within the next 5 to 10 years.
Steve, any way to justify 130 without the numbers?
Without the numbers, sure. I'm clicking on the wrong computer. I'm lost. Can you please? Thank you. Without talking about numbers or valuation, this is exactly why you can justify that it is not hype. Because the big bear case was they can't grow commercial and they're just a black box government company. That's clearly not the case. Their growth rates in commercial has far exceeded government. It's been bigger than government since Q3 2021. Total customer count keeps growing. Commercial keeps growing. And when you keep growing with these types of customers with a net dollar retention that's over 110%, it creates a compounding effect. The next slide is the deals. And when they keep doing large scale deals, and they just had their largest quarter, I think it was 104 deals this quarter of over $1 million. They keep adding. So the net
what if this number goes nuclear in the next couple quarters?
If this number goes nuclear and let's say it goes to 125 instead of 104, maybe 130, that would be a huge growth rate on top of where they just created an all-time high for deals. The sky is the limit because the ammo from U.S. commercial growing now shifts to a story about all the additional deals that they're making, and you'll see a narrative around a compounding effect going forward. And that's how you can justify this without looking at valuation. That's, to me, the only reason.
All right.
Can I
That is
share
fair.
an interesting angle from you don't see my no need
This
to
one?
change what I share. Sorry, give me a second.
Yep. Thank you to 686 people being here on the show today. Everyone's Twitters and YouTubes are in the description, so please make sure to check everybody out.
Steve showed greatly like how the number of customers is increasing. Unfortunately, on the commercial side is not increasing as fast as we initially expected, but Karp addressed that concern, essentially saying, look, we are not targeting the number of customers, we are targeting the quality of customers. But yet the effect is still very interesting. This is the client breakdown in percentages of the clients, and we know from here like how dominant it is becoming US commercial in terms of the client breakdown. Now almost half of Palantir clients are US commercial, while when it went DPO it was well below 20. So essentially on the commercial side was mainly driven by commercial international, and now we are just seeing the starting point of this expansion of the US commercial customers entering the numbers more and more. And now for the first time, US commercial became bigger than commercial international. So I expect like the bull case that right now we are not really discussing, but I think it will have like a massive implication is when we will see like this big number, this big green number of US commercial clients expanding and becoming gradually essentially a bigger and bigger size of the revenues. Imagine like what we see here in terms of commercial client breakdown translated into the revenues with this green size that keeps expanding more and more, because this is the side that is literally driving all the growth. Like the commercial side grew around 40%, but essentially all the growth was from US commercial. Like the international commercial were essentially stuck and down quarter on quarter. So that's the big. So the big bet that we are making essentially to sustain this 30% growth is in the next, let's say 3 years, 5 years, US commercial keeps expanding like hell, capturing the biggest potential clients in every industry, and then scale down gradually to the smaller ones that by looking at the big guys becoming crazy efficient, they would be triggered, hey, I want this too. And then when this part matures, then is where then they could also focus into international markets, which right now are there. Sometimes we see very good deals like Sompo, Fujitsu, and so on, but overall, it is still stuck. So that's the big bet.
Okay. Arnie, if you got to get out of here.
Yes.
We can see you later.
So much.
Arnie's got a date at 7 a.m. right now.
Arnie, I like the slides. Very good.
Thank you so much.
Thank you, Arnie. Talk to you later. Bye-bye. Okay, so here's the question. None of us are selling Palantir, obviously, because we're a cult.
Not unless they get called away.
Right. He doesn't actually have a date. Me and Matt were just messing with him that he has a date at 7 a.m. It's a coffee date somewhere in Italy. But none of us are selling, but none of us are buying either, right? No one's buying at 57. No. Matt's not buying. I bought 4 shares the other day because someone gave me a super chat, but outside of that, I'm not buying. So if no one's selling and no one's buying, does it really need to have that 40% correction, Steve, that you're talking about?
It doesn't need to do anything. I'm just saying that at this point, how much more can it go up before everybody starts taking profits?
But we said that at 35.
I said that at $40, you know.
Okay,
we said that at 27, to be honest. When it went from 16 to 27.
Once again, you're up over around 250% in a year now. Like this is much different territory than being at 40 when you had all the institutions coming in, adding it to S&P funds. This is a different level now. And here's the one thing that Arnie made me think about that is actually a little bearish in my mind. you've had so many milestones hit. The biggest milestone was convincing the public that this was a real company. The next biggest milestone was U.S. commercial and commercial in general being able to keep up pace. Then the next milestone was profitability. Then the next milestone was AI. Now, what milestone do they have to hit to keep that momentum? Because at what point does this milestone about this being the most amazing AI company be so saturated that it actually becomes about the numbers? Because unlike Tesla that has other verticals that it can go into, at the end of the day, this is a software company. It's one.
But I feel like that's the problem. What if they are a monopolistic software company on implementing AI, and none of us are realizing it to the level that we should be realizing it?
I don't.
Which means
Salesforce
is not competition, is what I'm trying to say.
No, but is that possible to really say though? Because really, and before you answer, think about this. We all know that this is for machine learning and what they do. They are at the top of the pile. There's no question about that. But can you really be a monopoly on AI when AI is going to be used in many different areas that companies use that Palantir is not competing in? I just don't know that you can answer that question.
But that's the problem that I disagree with. So firstly, I agree with a lot of what you said, Steve. I think that they're, in order to value like this, I think somebody said it earlier, you have to be recognized as one of the premier AI companies within. And do I think that people might get tired of the name? There's that possibility, but it could end up being like NVIDIA, where people just continue to doubt it and people are just wanting to keep getting involved in everything. But going back to your specific point, that's the beauty of Palantir, is they don't just create something that is trying to fit a square into a round hole. They literally will get involved in any sort of industry or vertical, and they say, what are your biggest problems that you're trying to solve, and create software specifically for that. It's not like Microsoft Excel where you're trying to figure out what you want to do and try to make it work using the software. It's like they literally say, what are you trying to do? And they help create applications.
So let me ask you Let me ask you guys something. So we know that what Matt says is 100% correct, and they go to solve problems, and they are top tier at solving problems. And they have solved a huge problem for many businesses. But once again, many businesses use multiple software platforms. At what point do companies say, okay, Palantir, we want you to truly be our ERP system? And what I mean by that is, now you're talking about Oracle, Workday, SAP, bye-bye. At what point does that happen? Because I got to tell you, I'm not going to say what companies anybody works at, but going off one of those software platforms for HR and finance would be a logistical nightmare. And Matt, I'm pretty sure your company uses one of the three I just named.
Yeah.
And I know that, I know what I went through onboarding to one of those companies, and I don't even want to think it would be like offloading to one of those companies. Second part about that is, what verticals can they really tap into next? So are they going to take out tax with Intuit? Are they going to take out other types? Are they going to take out CRM? So
I mean, why not, baby?
I hope they take out SAP. That's what
they've publicly said they want to go after SAP. So
I mean, look, if they do that, I will change my tune and I will start buying again, because the market for ERP is so big. And I don't think people, unless they work at a fairly big company, really grasp how dependent big companies are on these ERP systems. And even though Palantir makes an ERP, it's an operating ERP. It is not a back office service ERP. And when I say ERP, I mean your benefits, your full HR suite, your training modules, your accounts payable, your accounts receivable, all your budgeting, all of your payroll is done through it. I mean, truly full suite back office services. So every company uses it. Amazon, I believe, is a Workday customer. I mean, every company uses one of these software systems. So if Palantir was to compete in that and start to win, I'll start buying right now, because that market is way bigger than the one Palantir is playing in right now.
I would agree with that. And that's why you see so many people. You see ADP, you see Workday, you see all these companies fucking huge. And I agree with you. If you're able to eat their lunch, then yes.
And we should make a very big distinction. Like right now, and I haven't paid too much attention to the advancement that ADP has made, but there's a big difference between full-blown ERP and HRIS system, because HRIS is strictly your HR and payroll, whereas a true full-blown ERP includes all the finance also. So there's two different spaces. I mean, you have Paycom, and you have a couple of other pretty big ones that are really just HRIS systems, unless they morphed in the past couple of years. But that market is gigantic.
Let me ask a stupid question.
No such thing.
If we let's just say we get to the tens, 20s of billions of dollars in cash on hand, and we haven't cracked that nut, do you think it would be smart for Palantir? Granted, it would be a total loss, but do you think it would be smart for Palantir to say buy one of those systems, try to figure out the way? And we're not saying use it as a bolt-on acquisition. I'm saying use it for the knowledge that's within there with respect to how these back systems are run and everything like. And literally, you'd be buying that business to blow it up, right? And then you would essentially be like, how do we get from point A to point B using X company, right? So you would literally say, this company is working with, let's just say, Apache Oil Company or something like that. And you know for a fact they're working with Apache. And you're saying, all right, we're going to buy this company because we know that they work for Apache and we want to get involved in the oil and gas ERP systems and everything the like. We're buying this not because we want to basically get that normal bolt-on business, but we want to figure out how we get from point A to point B. And you literally are, say, siphoning off from people's time to be able to create software, create those connections, and revolutionize ERP systems. Do you think that would be a good use of capital?
They should just buy Workday right now. Have you looked at Workday's numbers?
What's their market cap?
I thought Workday was like $100 billion.
$68 billion. And you ready for their actual financials?
Go ahead.
$7.8 billion in revenue.
Wow.
Net income, okay? And keep in mind, Workday is a pure SaaS play. This is a pure software company. Pretty much same thing as Palantir, just different vertical. Net income, $1.54 billion.
Wow.
Way more profitable than Palantir, way more revenue than Palantir, half the market cap.
Okay, so what are we supposed to do when you say Workday is worth $68 billion? They do $7 billion in revenue.
Free cash flow, $2.1 billion. More than double the free cash flow. And that's why I say at some point numbers have to matter.
So to put this into context so people really get why you wrote this article, Workday does $68 billion market cap, $2.2 billion in free cash flow, $1.5 billion in net income, $7.5 billion in revenue. Palantir, $130 billion market cap, $1 billion free cash flow.
$2.5 billion net revenue.
$2.5 billion of net revenue, and I think $500 to $600 million of net income, with most of that being from interest income.
More than a third is from net interest income. And that's why I'm saying that at some point numbers have to matter.
So can I ask a silly question to fully digest this? What are they growing at in terms of revenue growth?
I don't know. We could do the
I'll
math
find that right now. I'll find that right now.
I mean, look, year over year, it's gone from 6.2 billion to 7.3 billion. So what is that, like 13, 14%?
They are growing 16% year over year.
So, I mean,
16.7.
Not horrible. It's double-digit growth rates, and they're a bigger company, so it's harder for them to grow. I mean, for them to grow at a 16% growth rate, and they're doing that much more revenue, I mean, you can't say that Palantir is so much better because they're doing 30% growth. Palantir is a much smaller company by revenue.
Okay, so now here's the thing. A lot of people, especially in this community, bought Palantir at $7-8. A lot of them are probably not selling. Some of them maybe take profits, covered calls, but they're not selling. So you got that shareholder base that's not leaving. Institutional ownership, shout out to Brett. He posted this week, went from 44 to 49. So that's a nice 5% gain in institutional ownership, basically 50-50 with retail. And then Workday is not in the AI, change the world, $1 trillion enterprise thematic. Palantir is. Could that be the reason the big guys just don't want to miss out?
Say that sentence again.
Workday. So Palantir is in this multi-trillion-dollar enterprise AI thematic along with NVIDIA, OpenAI. It's just in that bucket, Tesla, etc.
Okay. Yeah.
No one really, I mean, Workday is like
Every large scale company uses either Workday or
I'm not saying
Oracle.
they don't. I'm just saying as an investor, I don't give a shit about Workday. A lot of people don't, right?
Agreed. And I get that because SaaS had its moment and now it's AI.
So that's
Even
my
though
point.
Palantir's a SaaS company.
I get it, but my point is, if the big guys are buying at these levels, 40, 42, whatever,
Now you're
maybe it's
talking
because they
about,
believe that they want to be part of that story.
now you're talking about pure headlines moving companies. That's all you're talking about at that point.
Well, it has to be, right? I mean,
But
if the
that's
numbers
all,
aren't moving
that's
it,
my point. But that's all my point. That's all it is at this point is just headlines and excitement from AI. Because at the end of the day, $1 of revenue and $1 of profit is $1 revenue and $1 profit. It doesn't matter if I'm selling widgets or AI.
but Tesla compared to like GM or Ford, you would say Tesla at $1 trillion today. Congrats to all the Tesla shareholders.
It's bigger than the next 12 auto companies.
So that's insanity. But people are buying Tesla because it's Tesla. So my question here,
there's a reason people are buying Tesla.
whatever
There's
the reason
several
is,
reasons.
you're expecting a lot of Elon Musk and a lot of future growth. That those you could dumb it down to those two. For Palantir, Alex Karp, and hopefully a lot of future growth, right? Like that's
Okay,
the headline.
but once again, it goes back to, let's say Palantir grows by 3x. Let's say they 3x the revenue and the profitability over the next 5 years. That would be incredible. Right? Is it possible? Maybe. But I think that would be an awesome accomplishment if they did that. Can we agree on that?
Yeah.
Okay. At that point, they're roughly doing the same business as Workday.
But it's Palantir.
But at some point, that argument can't hold up anymore. Like at some point, that can't matter for 10 billion of market cap here, 20 billion of market cap there. That's all I'm saying.
What I can say, and this is still that like X factor that I still think we're all trying to search, right? Because I think 2 years ago when I joined the weekly podcast with respect to Palantir Weekly, I think people were like, what is it? It's a black box, whatever. I think people now have started to recognize that these guys are doing things ahead of what other people in the industry are doing. And it goes back to what Amit was talking about, maybe with OpenAI and the valuations associated with that. I still don't think that people fully recognize the true on potential of what's going on with Palantir. And I think that with that, people don't recognize that the products that they have today are not going to be the products that they have in 2 to 3 years from now. They will have more products.
Yep.
They will be able to release Warp Speed. Warp Speed is unlocking manufacturing. That's a whole new avenue that we haven't even gotten into yet in terms of how that can be utilized. But I think that there's still so many different avenues and places that the company has yet to get involved in that people don't recognize. I still think that somebody that uses the software still doesn't understand how it can continue to grow at the pace at which it's growing. And in what they have in terms of like what I saw that they did with our organization, I can only imagine if they go into other companies that aren't necessarily in top quartile positions and doing what they're doing, how much of a step change that can do. And also, to me, what I recognize is a lot of these companies, this is a plus and a minus. A lot of these companies they take so long to implement something, as you probably have seen in plenty organizations as well, that it's going to take a while for some of these things to truly pan out. In my opinion, where does the NDR actually stop? We've seen it start to reaccelerate. AIP has barely been monetized. Warp Speed is coming out. So my question is are these additional products, when this thing direct listed back in 2020, September 2020, just about 4 years ago, we had Foundry and we had Gotham. They had just started to have inklings of Apollo, or maybe Apollo was on the rollout. Now we have AIP. Now we're getting Warp Speed. So over the course of the last 2 or 3 years, we've started to get more and more and more. And not only have we gotten 2 new applications, there are 2 new operating systems, which is going to be Warp Speed and an AI system that sits on top of those operating system, which is AIP. But you've gotten additional functionality in Foundry. You've gotten additional functionality within Gotham. You've gone from a use case. If you looked at the investor day, I'm going to get the numbers wrong, but the magnitude is there. of like 18 industries in direct on direct listing day for their investor presentation that they did in 2020 to now being over 50, 60 different industries. And you go to tell me that they fully have maximized the usage of their software applications and operating systems within all those 58 or so industries. I would say there's still, it's like saying that cloud is dead to me. Like the amount we still see cloud growing at 20-30% per annum. You still see that we haven't gotten to a place where all the hospital beds within the U.S. are still not using Palantir software. That's a huge runway that they can still grab. We've just got the NHS deal within the last year. Who's to say that we're not going to get another hospital deal within main Europe or Africa or Japan, right? I mean, who's to say that we aren't going to get all these other things internationally where we've just start to hit the surface on a lot of these things? I still don't think that what we've seen is where we're at. Plus, I still think we're giving away software for free. And with that, you're going to be able to grow at much bigger long-term pace of 30%.
And to your point, Matt, Steve, I just want you to listen to this sentence. I don't know if you ever read the Bank of America $50 upgrade, but Matt's basically saying they're going to create a lot of new shit and create a lot of new value from that we can't understand. This is what Mariana said a month ago. We view Palantir as a key enabler of the safe and secure implementation of AI and ML and upcoming data science capabilities like imminent quantum computing. I don't really know what imminent quantum computing is, but the fact that she even mentioned it means that she's thinking the horizon for Palantir's infrastructure can be bigger than what we've imagined. This holistic approach relies on decades of work and experience focused on adding value to the mission. This complex and iterative approach allows the decision makers to determine where, when, how, and to what extent they implement intelligent processing solutions. What if the TAM just keeps getting bigger and bigger and bigger?
It could. I never said they were going to stop growing.
No, I know. I'm just. What is your perspective on that to justify the current valuation?
I don't know that it can I mean, look, right now it is justifying the current valuation because people are still buying. But at some point, like I said, numbers have to matter, and it becomes a profitability thing. Now, if they start growing at 40-50% revenue, this is going a lot higher. But once again, that needs to happen and be sustained. Like, you can't honestly tell me that if they don't keep this up, that this stock is staying here.
So I agree. I actually want to show you guys something. This is the last little segment we do. And Steve, you'll love this because you love this commentator. This is a 2-minute clip back in 2020 on CNBC around Intel and NVIDIA. And I think you're going to really like this clip, Steve, because what the guy talks about here maybe also relates to an extent to Palantir and us needing to have a little bit more imagination when valuing it. So let's take a look at these 2 minutes and we'll get the chat's reaction to this as well.
Fat, expensive hamburger you want. I'll bet if we look at 1 year from today, I'll bet you Intel's share price, I'll happily pay if I lose, but I know I'll win. So I'll bet you Intel's share price has appreciated more than NVIDIA's share price.
Well, that was Jenny Harrington 1 year ago today with a bold bet, as you heard, that Intel would outperform NVIDIA over the next year. Let's look at the returns. It didn't happen. Jenny? Now, I'm not sure if the Polo Bar, well, Polo Bar's not open yet. Minetta has an amazing burger. I think the 21 Club, I'm not sure if that's all, but I love that burger too. I know where Josh likes to roll usually at the Shack, but he's going to milk this one now.
Oh, not for this one.
Yeah.
Daniel Balut is making
He
this
wants
burger.
gold on his hamburger.
Jenny, I think you deserve the first word here after the tape.
Thank you.
Talk to me.
Okay, I have 4 takeaways on this. One,
Oh, get outta
it's
here.
unwise to make an audacious. Come on,
One
it's
thing.
unwise.
I love
to
Josh.
just bet on national
So
TV.
easy. Okay.
I was totally wrong. Okay, there. 2,
Good.
I will never back down on that valuation matters and that I will underpin my process. 3, it's a good reminder that you don't need to be right all the time. And 4, if I liked Intel at 12 times last year with all the good things that have gone on this year, right? Like they beat earnings 3 times, they got Pat Gelsinger, they're getting into the founder business. If I liked it at 12 times last year, I should love it at 12 times this year. So Josh, double or nothing?
Oh, no.
No.
Oh.
Spare us. We don't want to wait another year. Neither does Josh. He's hungry. He's got his
All
hat on.
right,
He's already
whatever
thinking
burger
about
you
where he's
want,
gonna eat.
you won.
Jenny,
You won
honestly,
by a million miles.
I know that's the thing. It's the magnitude. Look, I don't
terrible.
disagree with you that valuation matters, but honestly, if it were that easy to just look at like, EBITDA to enterprise value or PE ratio, like everybody would be rich. What's required, especially in technology, maybe more so than any other sector, what's required in technology is an imagination. So there's all these guys walking around Wall Street. They're like, oh, I'm a numbers guy. Oh, that's great. Every number that you could locate, I could find too with a Google search. There's no edge. Like anybody could see that Intel is cheaper. Anybody could see that Intel is cheaper than NVIDIA on every metric. What's required is imagination, creativity. And many of the types of people who come into Wall Street don't have it. They don't have it.
But I would argue that my imagination here, I would argue my imagination here is far greater than yours. I imagined a stock of 70%.
I guess that's one way to look at it.
You know what?
You imagined the world in which Intel mattered in technology anymore. But what you were doing actually is investing in the rearview mirror.
You know what? To me.
So if we have to use imagination, because he has a hell of a point. In 2020, you had to imagine what GPUs could do for the world. And if you had that insight, you did very well on NVIDIA. Are we just not fully imagining what Palantir can do for the world? And these numbers, these metrics are irrelevant because Wall Street cares about these numbers, but we as tech investors shouldn't ignore them. But we should really focus on what could be the potential if we're investing in a tech stock like Palantir.
Look, Josh Brown's 100% correct in that, where you could look at many companies and they've never traded where they theoretically should be. Look at AT&T. I mean, that's been a value trap for decades at this point, and it's traded in the high single digits for PE. I mean, Jenny Harrington, Intel, she's right, is still going to be relevant. It's just a lot of things went wrong with it, and nobody saw AMD taking almost 45% of the desktop market share with chips. That was something where a competitive factor came in and messed that one up. And Intel never got in on GPUs, which caught a hot flash with not just PC gaming, but Bitcoin mining. Right. And then the mother load of the compute needed to scale AI. And Intel completely missed the boat on that because they tried catching up with that ARC GPU and it just didn't work. I mean, he's not wrong with imagination. You had to have imagination to buy Amazon at $6 or $10 during right when the .com boom bust.
But also in 2014, you had to have a hell of an imagination to buy Amazon.
Yeah, I mean, you definitely did. Even I'd say 2021, when everything blew, 2022, when everything blew up, and Meta at 90. Yes, at some point you need to have imagination and look past numbers. Meta may not be the best example because their profitability was still off the charts.
Right.
But at some point, it becomes a mix of both. But at some point, imagination's going to stop. We saw it with NVIDIA. Let's not be crazy here. Yes, NVIDIA is at an all-time high right now, but not too long ago, it went under $100.
Correct. Yeah.
And it went from around 135 or 140 back down. Pullbacks do happen. And just because a pullback happens doesn't mean it won't reverse and make new highs. And that's the thing I want to be very clear on. I'm not saying that Palantir is done making new highs. I am just saying that it would make sense to curtail and have a pullback before it makes new highs, because that would be healthy. I mean, every great company that has done that and had a meteoric rise has pulled back. Apple, the gold standard, because they generate the most profitability of any company, has had pullbacks. That's all I'm saying, is that right now we have gone up so much that a top could be in for the foreseeable future. That does not mean that in a quarter or 2 quarters from now, something may not happen to reaccelerate that share price appreciation. That's all I'm saying.
I've been with you, Steve. I mean, I thought the same when the stock went up north of $35, and then I thought the same before 3Q earnings. And do I think that the 3Q earnings and the problem that I have with 3Q earnings is I still agree with my initial estimate that in order to justify where it was at the $40, $42 range where we were before Monday, was that we needed to see 35% year-over-year revenue growth. We didn't get there. We got the 30%. To me, I still think that means we should have had a pullback. And I think that
all of us thought on the weekly that 30% would not be enough.
Exactly. And what I'm about to say agrees wholly with what Steve is saying, because I think at the moment, people are still so flabbergasted with the words that are coming out of Karp's mouth. And I'm not saying that that's going to be wrong. I'm just saying that people are now hypothesizing as to what that means. Do they think that means 40% year-over-year revenue growth in the future? 50%? Because we have yet to see some of these things, right? I mean, you're talking about the things that are going to be happening in the future. And so far, Karp has been right? If you think about it, since AIP, he has been right. We've seen a reacceleration in growth. But I agree with Steve. Where do we see that pin stop? And if the case is that we stop at 30 and we start like just flatlining at 30%, I agree with Steve. We're going to see a large pullback. And is it to say that that's bad? I don't think it's bad. I personally would love to buy more shares. I told everybody that last week. I hoped it would drop back into the 30s so I could double up my position. I'd love to get to 10,000 shares. But at the moment, I think because we're in this no man's land, Steve said it earlier, we're priced to perfection. I see any missteps, whether that's a quarter of lack of contracts, if that's a quarter of, and that when we've seen that too, we've seen droughts of big contracts and things the like. So to me, I think that there's a lot of things that can go wrong for the company, but the things that I don't know is, and this is where I'm always humbled, as I have been for the past 2 or 3 weeks, you don't know what you don't know. And the thing is I still think that this company is in a league of its own for now, until something comes out of the woodwork. And I'd love to see the company that comes out of the woodwork and challenges Palantir on some of these things. But for right now, I think, it's definitely not something you sell unless maybe you want to take short-term profits, or, you've made so much money off of it that it just doesn't justify. Your portfolio is completely out of whack in terms of percentages. In that respect, I would get it. To me, I should do that for myself as well, because this is a pretty big portion of the portfolio now, but not nearly above like 20% or anything like that, but it's definitely grown. But I don't know.
It's a fair point.
I'll leave it at that.
It's a fair point. We're all trying to use our imagination here, but at the end of the day, the numbers do matter, and a lot of these numbers aren't matching up necessarily to current growth estimates, but it's just a question of how well they execute into the future. I think what this means for a lot of people in the chat that are watching, that are retail investors that have been in this community for a long time, and I think you guys would agree, is to just enjoy the ride, right? Like if you're not going to sell, you're not going to buy, you have your position built, you sit back, you let the rest of the world FOMO into it, and you enjoy that you paid attention in 2022 when no one else did. Like, I feel like that's
a lot of people just think it's just going to continue to go up, which it very well may. I just don't think that's realistic at this point in time.
Yeah. And I think a lot of people also have covered calls, and that's really annoying as the stock keeps going higher, right? And it's not the coolest thing to have. But I think for the people navigating those covered calls, you just have to be patient. And if there is a pullback, then you can get out of them. If not, then you're going to have to either pay up for it or keep rolling. But I think if you don't have any covered calls, your position's riding free, you don't want to sell. And maybe if you really, feel like a bozo for not selling, if you see the stock keep going up, maybe you sell a certain percentage that's enough for you to feel like, all right, I'm happy with what I've sold, or I took out my initial, whatever it is. We know the insiders are selling. We know Karp is selling, is Peter Thiel selling, so they are selling as well.
Everybody needs to do what is best for them.
Agreed.
Yes.
That's all, whether it is holding, whether it is taking a profit, whether it's taking the initial investment out, whether it's buying more. Everybody needs to make their own decision and do what is best for them. I just want to be very clear. I think that this is going to be the second most important software company behind Microsoft. The reason I say second, not first, is because I don't see any company that could be a more important software company than Microsoft, when Microsoft has Microsoft Windows and Microsoft Office. That is the backbone of computing at this point. And I don't think that's going to change. But I'm very bullish on the future prospects of Palantir. I have said it in the past that I've made the model, and from what I see, from what realistic valuations are, I do think this can get to $100 or $150 share price over a period of time because of the growth rates on their free cash flow. All I am saying is that if a pullback happens, don't be surprised.
All right. That is it for us. Matt, any final thoughts as we end out this week and Palantir ends out at $58?
I echo what Steve said. Everyone has to do what's right for them. I wouldn't fault you if you take your cost basis out. And another thing that I would say, I don't think that you should also rush to sell, right? Like you said, though, you got to do what's right for you. But think about this. I mean, I know some people are infatuated with the covered call thing. It's gotten me burned currently on Palantir. I'm still going to be rolling out for quite some time. But even still, I think if that's something that you're curious about, learn up a little bit about it, but don't get too greedy with it. You could take a couple percentage points here and there, pay yourself without actually having to sell the stock. But at the same time, just be cautious. You don't get yourself in a situation that, you think you know what you're doing, but you don't. Think about the consequences of it. I'm currently sitting with something being probably too greedy, but did I expect the stock to blow past the mid 30s into the literally almost $60 range? I did not, right? As you guys know. So even being conservative, sometimes you can get stuck in a situation if you have a very large movement in a very short amount of time. So just always be cautious with stuff like that. Don't pull a Tevi, as some would say. But yeah, I think overall I agree with Steve. I think we will have a pullback at some point, but I've been thinking that for the past 2 weeks. So remain vigilant, and always I think people need to recognize that this company is going to be coming up with new use cases beyond our wildest imagination, right? Some of the shit that they've been able to come out with is years ahead of what I was thinking. It seems like these guys know what they're doing. The thing that's more beautiful, and I'll leave it on this, and I've been saying this for 2 years, but let me reiterate it. The thing that's beautiful is, to me, I think it's easy to make huge step gain changes in industries that you are just learning about if you are very knowledgeable about how AI and computer software and computer analytics work. And so it's easy for a company to come in with the capability of what Palantir engineers and forward deployment engineers have, with a very unique system, with ability to ontologize things and a bunch of different things that they do when they come in and implement Foundry or Gotham into a company. But I think it's very much easy to go into a company that's been doing the same thing for 50 to 100 years, put in a new operating system and have massive gains, than it is for a company to do the opposite. Try to be, let's just say, great at building farm equipment or building airplanes or something of the like, and trying to create something that Palantir has created. So that, to me, is a huge moat that I think a lot of people have still continued to go down over the past 2 decades, which is, we'll just create something in-house. And that in-house piece of software ends up being garbage, or you end up getting some sort of consultant that charges you way more than they should have. And the product generally doesn't work, and it doesn't communicate with any of your other softwares within your organization because it's a legacy piece of kit. And that wasn't part of the agreement, right? Palantir is the complete opposite, right? They get everything from basically your wellheads or your frontline work all the way to the back office for you to do analytics off of. And it's a perfectly, in my opinion, key software that has really step changed how at least we do business in the oil and gas industry, and I guarantee many others. But that's just been my unique experience, right? It's easy for them to come in, learn a little bit about what you want to do, get you from point A to point B without the garbage and inefficiencies in between, because they don't get involved in that day-to-day stuff. They can literally say, this is where we are, this is where I want to go, this is where the data is, this is how to get your answers, and build you whatever you need, versus some other Joe Schmo with all the different things going on in their brain to be able to say, well, we can't do that because that's the way we did it 20 years ago, or this, that, or the other. And they're so conflicted with everything. You need that outside point of view, and you need somebody that has that experience in building computer software, and that's Palantir. And I think we have yet to see the best of them to come.
Amit, is the chat right? Is Kramer now bullish again?
I think Kramer today did get bullish on Palantir, correct?
We're going to zero.
Every time. All right. Well, Thank you, everybody. Appreciate it. Enjoy the ride. Enjoy the journey. It's been a hell of a week for the community. It's been very fun. I think we had 7,500 of you on Monday for the earnings, which is incredible. The fact that thousands of people across the world came together for this one event, it's special, dude. It only happens for a couple other companies in the market. I think NVIDIA and Tesla. The rest don't get that many people that care about listening to an earnings call. So,
Mr. Kukreja, can I extend the invite for you to come to the Rocket Lab earnings on Tuesday?
oh, I'm down. I'm always down. When's that? 4 p.m., 5 p.m.?
One of those two. Yeah. So I think it'd be after your weekly, but
You know
just
what?
like continue.
I'll try to come too, so maybe you can.
No, fuck you, Steve. No, I'm just kidding. You don't want to know about Rocket Mortgage, Steve.
Steve, you just interrupt people. We don't want you on our
Yeah.
don't want you on our shows, dude. You interrupt. Them.
No, I didn't mean it like that.
If you come with your milk, I'm not coming. If Steve's there and he has milk, I'm not coming. I won't be there.
I'll
Steve,
send you milk and dry ice.
I want you to drink the milk while staring into the camera.
Steve, it's not natural to drink a cup of milk.
Why?
I just think milk is not like it's been propaganda. People telling us milk has calcium and like milk is just like it's not healthy in my opinion.
Okay,
it's not healthy.
I don't know what to tell you.
Steve, is that a sloth on your shirt? You're the fucking man, dude. I love this guy.
Yeah, coffee first.
I love this guy.
Oh,
Coffee
Steve, you
first.
want to tell everyone what you've been quitting for 6 weeks?
Coffee.
Really?
Yeah, I haven't had coffee.
No wonder why you haven't called me. You always call me when you get a cup of coffee, and I'm like, what? I'm just gonna. Is this window open? I'll jump.
Yeah, we'll come to Rock Lab. We'll check it out and we'll see.
Yeah, feel free. Don't feel obligated.
I mean, Matt's sitting on multiple multi-baggers this year. He had Rocket Lab at 4, Palantir this year from 15 to basically 59.
Dude, I always say, if I had Matt's money, I'd donate mine.
I'm just saying we all should have listened to him when he was saying Rocket Lab before, and not a lot of us did. A lot of people in the chat did.
100%.
Not a lot of us.
It's not for everybody. It might pull back as well. I do think. Well, I said this in my chat as well, and I don't mean to put this into like Rocket Lab Weekly, but we will be live tomorrow. If anybody's interested on Vince's channel, at least I think, unless he's popping out a kid, or his wife is rather. Dude needs to stay off his wife. He's number 4 in like 4 years. This guy's out of control. But anyway, what was I going to say? I think that Rocket Lab will pull back, but I said the same thing about Palantir, right? You know, who the hell knows what's actually going to happen?
If anybody leaves a comment on my Palantir article, I will respond.
Yeah, let's plug that. So Steve does a big job for the Palantir community. He's been analyzing it for literally 2 years. So please, if you're on Seeking Alpha.
Wait, did you say 2?
I'm just thinking 2022. But you've been here probably since 2020. I wasn't here in 2020. But you probably weren't. So 4 years, and please make sure to read this article, check it out, leave a comment, all that good stuff, and give some support.
You're the man, Steve. I love you, dude.
You guys got to stay on for a minute after it clicks.
All right. Thank you, everybody. We'll see you guys after hours. We'll see you guys next week on Palantir Weekly. Love you all. Good night. Have a good one. Enjoy the weekend. Bye-bye.